Welcome back to another Sunday night show, also known as Drinking in the Dark with Frugal Tiger, where we discuss major market moves this past week, as well as prep you for the upcoming trading week. So let's get right into it. A lot of craziness happening in the world, a lot of craziness happening in the markets, and of course, a lot of craziness happening in the cryptocurrency space. Everyone's calling for a correction. That correction just does not seem to be taking place. And quite frankly, planning for a correction has cost me a lot of money in the past. I don't want it to cost me more money in the future. You just got to ride the wave as long as you can. And I've never seen a bull market like this before. This is a whole new different type of market. No care for fundamentals, no care for valuations. And that's just how you got to trade it. If the tape just keeps pointing upward, you just go ride the wave. That's all you gotta do. No bad news seems to be taking down this market. Right now, I think with a full Democratic Senate, a Democratic president, there's an expectation of more stimulus. And for that reason, stimulus shrugs off all sense of valuations. There's no such thing as price discovery anymore, which is a process of the market finding correct prices over time for every stock. That is just not taking place, and the market just keeps moving higher. You honestly don't need to be too much of a stock picker on a bull market like this. If you just put your money in SPY or some other type of index tracking ETF like DIA, something along those lines, you'll make out just fine. Personally, I don't necessarily trade exactly like that at this present moment. I do want some protection, but essentially in a bull market like this, you can just put all your money in an index fund and just call it a day and don't worry too much about individual trading. This market just continues to ride higher, and who am I to call for a correction if it continues to go higher? The next piece of big news is Bitcoin craziness. Price of Bitcoin is relentless and it continues to climb higher. This is one of the few rare instances that I'm actually happy when things are moving completely crazily. I'm on the positive side of this transaction. Have I sold some Bitcoin? Yes. Do I think I potentially sold it too early? Yes, but I also don't fucking care at this point in time. I 4x my money and just I'm good with wherever it's at. I'm still continuing to hold some. There's going to be a lot of FOMO. There's not really that much supply, and a lot of the supply is taken completely off the market by hodlers. I myself am not necessarily a full-fledged hodler, but I know of some people who refuse to sell Bitcoin until it hits $250,000. So you have a lot of people completely removing supply off the market, and with the FOMO right now amongst the public, as well as the lack of supply, Bitcoin's continuing to move higher. I don't want to talk too much about Bitcoin personally. The reason I'm mentioning is it basically just has to be mentioned. It's the best performing asset in 2020. Just in case people do want to trade or have some exposure to Bitcoin, but they don't want to log into Coinbase or go through that hassle of trying to figure out cold storage or all this other Bitcoin terminology that I'm not expecting you guys to know. You can potentially buy an ETF. The ETF is called GBTC. I personally don't buy it, but it will track the price of Bitcoin. You can kind of see it's up quite big over the last 2 to 3 months since Bitcoin started moving rapidly in November. Big piece of news this past week with all the craziness on Capitol Hill and Washington and all that stuff happening is marijuana stocks jumped big on a Democratic Senate. We have a Democratic Senate now, a Democratic president. There is a chance some of the strict guidelines on a state-by-state or on the federal level might be reduced with the current political climate that we're having right now. So that's big news for the marijuana stocks. And my current thing is I don't try to speculate on stocks anymore unless it moves first. Well, the three names I'm focused on are Tilray, TLRY. I'm focused on Kronos and CGC. The bottom line is if these stocks continue to move, join the wave. If the price action turns positive, buy into it. Don't have this mentality like, I'm just gonna use Tilray as an example. I'm gonna pull up Tilray right now. Don't have this mentality that Tilray was $7, just a few weeks back. Don't have this mentality that, oh, I already missed out on a 30% move. A lot of people, and I hear even some of my friends say this all the time, I'm just using Tilray as an example. I'll wait till it gets back to $8 to buy it. But truth is, if it gets back to $8, the pattern's broken now. And now, if you buy it, you don't really know what direction it's gonna go. In my opinion, it is always the most dangerous thing to do to buy a stock before an actual pattern or a setup emerges. Yeah, you could have theoretically bought it at $8 a share and then rode it to $11 and already had been up 30%. So you might want to try to get it back at $8, but you can't look at that right now. That's already done. Hoping it goes back to $8 so you can buy it and then ride the pattern is it just doesn't happen that way. That's not the way stocks work. Right now, it looks like there is a potential for this stock to actually go higher. We'll see what the price action dictates next week. Tilray, CGC, and Kronos. Mostly Tilray. Tilray is famous for having huge amounts of speculation. It was actually at $300 a share several years back before the crash. Other than that, what are the other names that I'm watching that don't really have any major earnings? Mara, I'm still paying attention to Palantir. I talked about Aimwell. It's in a trading range from 26 to 31.32. You can maybe try to trade that trading range, but I would prefer, I think it's just easier to wait for an actual breakout. So maybe if it breaks past 32.33, it's more or less off my watch list. I have a small position in my long-term portfolio. Still paying attention to cybersecurity for the time being, but it seems like it's cooling off now after a huge rally. It might move off of my watch list pretty soon. And obviously Tesla, the bull market stock of all bull market stocks. Full disclosure, I actually tried to short it this week and then I just took it off like right away. And I'm like, what am I doing? What am I thinking shorting Tesla? This is madness. This upcoming week on Monday, I'm watching Carnival Cruise. It's at $20 a share. And I think it's going to respond very aggressively to earnings. Carnival Cruise is definitely a big loser in this pandemic. Let's see how it trades on earnings. I'm expecting a gap up and a gap down. And if it gaps up, buy the stock for an intraday basis. If it gaps down, I'm probably gonna short that stock for an intraday basis. And then we have Vaccine Monday going on with a lot of news coming out of J&J, Moderna, and then Bristol Myers. Those are three names I'm definitely watching. We'll call Monday Vaccine Monday. Prep yourself for those names. But a lot of the juice is coming out of Moderna. And what I mean by that is it's not necessarily, it was once a great stock trading name. This past week, it's been more or less flat, like, flat compared to how it used to trade. Tuesday, so we have the Consumer Electronics Show where AMD is presenting. Pay attention to AMD. I sold all of my long-term AMD at like $36 or $38 a share, and it's at 94. And my God, every time I think about that, I cry. That's why these lights are red and not green. Red lights really signify my losses and my overall sadness just in life. Microsoft, I sold this one too early this past year as well. Also presenting at the Consumer Electronics Show. And compared to other names like Facebook or Google, which have had pretty big moves, I think Microsoft still might have some chance for further upside. They're competing with Amazon through their Azure platform. I think Microsoft is not necessarily the worst long-term buy, even at this inflated price of $219. Thursday, the big names I'm watching Thursday are Taiwan Semiconductor, TSM, and Delta Airlines. These are great earnings trades. Just from watching earnings from earnings season after earnings season, these are the names that I personally will trade: Delta Airlines, TSM. BlackRock and Schwab are also announcing, but they're not as strong of earning plays, but of course, that depends on the earnings. So we can watch BlackRock and Schwab on Thursday as well. And then on Friday, we got the banks. We got JP Morgan, Citibank, Wells Fargo, and PNC. Just so you guys know, there was a time frame in the last 3 to 4 months where I would say 80% of my money was in banking stocks. because I mean, and I did a video about this several months ago where I had no idea where to move my money. There was no good spots for valuations, and I had plowed my money into banking stocks. I'm looking at stocks like JP Morgan now. It's $136 a share. When I was buying it, it was much, much lower. I think I got it in like the low 90s, high 80s, and it's at 136 now. And I don't know who is paying $136 for JP Morgan. I mean, it doesn't really make sense. Even Citibank, I sold a large chunk of Citibank. I just don't understand who's still buying this stock at these prices, $67, $68 a share. Having said that, one of the biggest takeaways that I've learned from last year is don't be so polarized in your decision making. If something's in the money, even if it seems bubbly, the market can continue to be bubbly. And so don't polarize your decisions. Yeah, take some money off the table, take 50%, 60%, whatever, but just leave a little bit because this market just keeps going higher. So I sold a large chunk of my banks, but I still have some money in there. And I'm looking for the next big value kind of investment right now, and I don't know where that's gonna be. S&P's at 3,800. I just hate to be an index bag holder right now. I know there are projections by the end of this year where the S&P is gonna be at 4,300, but you have to keep in mind, I've heard so many estimates in the year 2020 and they were all wrong. There were estimates the S&P was gonna be at 2,800. There were estimates the S&P wasn't going to close around above 3,000. There were estimates the S&P was going to drop back down to 2,600. These analysts get paid a lot of money to do absolutely nothing. All their assumptions are wrong. So just keep that in mind. Estimates, valuations, fundamentals. This is a different market. All that shit's out the door. If the price keeps going up, follow the price action, buy more. If the price starts to drop, you start selling and potentially shorting the market. Anyway, I know I said that, and I also said I sold the bank stocks even though they're still actually going higher. Truth is, I don't like the fact that almost all my money was tied up in one freaking sector. Okay, that's just the bottom line. I had 30% in cash and the rest in banks, or like probably 20% in cash and the rest in banks. I just had way too much exposure to the banking sector and I felt really uncomfortable. And I'm thinking to myself, who the hell is paying $136 for JP Morgan? People are willing to pay for them. That's great. Let me just, whatever I have, I'll continue to sell as the price action moves higher. These are like my investments that I'm slowly just trying to get rid of. At one point, this was the only place where valuations still seemed to make sense. At this point in time, it is scary. We just never know. We just never know with this market. It's full of surprises, and it's another week of trading the bubble. If there's one quick takeaway, just remember to trade banks on Friday, the vaccine stocks, Moderna, J&J, Bristol Myers, things like that. Monday, AMD Tuesday, Microsoft Wednesday, Taiwan Semiconductor, and Delta Airlines Thursday. That just about wraps up this upcoming week. Yeah, and the marijuana stocks. That's all I got. Thank you all for tuning in, and I'll see you all next week. I just want the money.